The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everyone. Thanks for joining us today. This is Matt Tour up at Insurance Agency Marketing Services. Appreciate you joining us here on a Friday morning. I know we're going to be going over some really valuable information you can utilize for clients trying to save money on taxes on inheritances. We're going to be going over the stretch concept for both qualified and non-qualified accounts. We'll be going over those here shortly. And then this whole webinar should last right around the half an hour range, so we'll try to get you in and out of here as quickly as possible. I know we've seen a nice increase in production this year based on some of the higher rates that are out there in the beginning of the year. We're definitely seeing a reduction in interest rates here lately. And going into September, we see a slew of companies starting to reduce interest rates. So that trend seems to be continuing here through the last quarter. We do have our referred producer program still going here at IMES. You can earn some nice incentives on money based on referrals. You also get a nice override on their business, 20 basis points on the business they write through IMES. You can earn thousands of dollars based on your referrals. I know we pay these out on a quarterly basis, and I have agents that call me every quarter looking for their checks. So definitely a nice feather in your cap to have those coming out your way. We also have our market reimbursement, reimburse $100 to $300,000 of premium on the index side. So a way to build up a marketing account you can utilize based on your production through IMES. We also have our new producer perks. You can earn some really nice incentives based on production your first 180 days of being licensed through IMES. We've got different levels of production you can qualify for. We have seminar systems. We have a Ritz-Carlton travel package. We've got our iPad, your cash bonuses, Social Security turnkey system on a lead program there. And we've just introduced a brand new program you can qualify for based on the higher level, the $500,000 level. We have 25 guaranteed buying units at a Social Security claiming seminar. Great combination. Typically, that's going to cost you multiple thousands of dollars, but based on your production, you get it for free. It is a $2,500 value, so really a nice combination there you can earn based on your production here through IMES. We've got a great back office support team. We've got a great new business team. They handle your business when you send it in. They'll scrub it, make sure everything's in there, with all these additional forms, product comparisons, suitability pages. I mean, there's a lot to go over based on new business anymore. You've taken a 2-page application and basically turned it into 50 pages. So really a comprehensive application you'll be sending in. They'll scrub it for you, get everything handled on their end, and they'll go ahead and forward that into the home office. And that really helps with making sure everything's clean when it goes in and make sure things get processed in a timely manner. We've got a great creative team. They do a great job on getting lead programs put together for you, helping you out with anything of card stock you need, or if you're going to do a logo change, whatever it may be, they'll help you out with all that information. Really a good system to utilize. They've got great logo design ideas, brochures. You can do social media advertising. They can help you out with that. They can help you out with the website development. I mean, they can really help you out with a lot of different avenues if you're looking at expanding your marketing basis based on what you do there on a daily basis. So really a great program we put together based on that. We have our IMES website, a great tool to utilize if you need supplies, if you've got questions on maybe some tax questions during tax season. Maybe you want to look up an AM Best report on a company. Maybe you want to take a look at some state-specific websites. Then we have a lot of different links on there you can utilize and take advantage of. Definitely a great place to go to really get in some good contacts based on insurance information. We also have a couple of good quoting devices on there. You can quote term insurance. You can quote long-term care. You can do sample income comparisons based on income riders. You can look at indexed returns based on different index strategies. Really a good location to go to really utilize a lot of different information we provide based on that. We have our retirement analyzer software program. I know Marcus in the office is the key go-to on this. Really good turnkey retirement software program. It really gives you a really good printout on the client's current situation based on retirement. Kind of what they need to do to get to levels of retirement they're looking for. Maybe they need to put additional money away. They need to buy more life insurance. Look at safer investments. A lot of good valuable information comes off this retirement analyzer software program. So definitely a good place to go to pick up details on that. We have put together our wealth management team. It's a new area in the office we put together a couple of years ago. Really, it's a good option for those looking at getting involved on that side of the business. I know we see a lot of money going into that side of it right now. I'm going to launch a quick poll here. If you have interest in getting involved on the wealth management side, I know that Charles, Michael, Joan they'd all be glad to help you out with on that end of it. I know we have seen a big increase in assets under management the last couple of years. It's good to have more feathers in your cap on things that you take care of as an advisor. And if you can handle more areas of the market, then it really helps on your overall deals you can help your clients out with. You hate to refer someone down the street to somebody else. That individual builds a better rapport than you have with the client, and all of a sudden you've lost that client. So you don't want to lose clients by referring them to friends or to other advisors. You want to be able to handle all that on your end. So if you do have interest in looking more into the wealth management side of our business, you can click off yes. I know they help you out with testing. I know you need to get your Series 65. Some other requirements you'll need in order to pursue that side of the market, but they're able to help you out with that side of it. And it's a great way to increase your revenue as an agent, and also to help your clients with more choices on different platforms of investing. You can do both insurance and securities, and that way you have all your bases covered. So really nice combination. If you have interest, check off yes. I'll leave this poll open for another 30 seconds. But I think it's a wise investment to invest in your own personal practice and have more options available to clients. I know with the ever evolving nature of securities and insurance, I mean, back and forth, 1 year one's going to look better than the other. It's good to have all the options available to your clients at that point. I'm going to go ahead and close this up. We'll go ahead and move forward. We also do our life and annuity academies. I know we typically do these about once a quarter. We do have one coming up in September. I know that class is filling up quickly. We do have a couple spots left. Some you have some interest in. I'm going to launch another quick poll here on that side of it. And I know we've got some great interest in our academies. It is all expense paid. Typically one of our home offices takes care of expenses based on bringing you in to the meeting, and really a good use of 2.5 days of your time. You pick up some great sales ideas. We go over some in-depth case management situations. We have a number of our top producers give presentations at this meeting. They go over closing techniques, being able to get in front of more clients, the things they use to get in front of more clients. We'll go over some of the index strategies that are being utilized now with volatility schedules. Some of these hybrid index accounts that you see out there now, a lot of different options that are available to clients. So just depending what's going on, good ways to broaden your horizons based on what's available in today's market. We'll go over some software that we have available, including the Retirement Analyzer. We'll go over some other software information with you can use in the field there. And then we'll go over some other strategies to use on indexed and fixed annuities and being able to close more sales in the field. So some good stuff there. If you do have interest, I'll leave this open for about another 15, 20 seconds. Check off yes. You'll be contacted by me or someone else in our office. I know I typically follow up with all the attendees and non-attendees the day of or the day after the meeting that we have here in the webinar. So if we also will send you a link to watch a recorded version of this. If that's something you want to review, we'll be glad to get that information in your hands. Based on that, so today we're going to be discussing the use of stretch IRAs, the use of stretch non-qualified accounts. It's really it's a big area right now with a lot of money being moved around, a lot of death benefits out there where you've got big chunks of money in the IRA situation where the money has never been taxed, and you're really looking at a ticking tax bomb where if you move a block of money to a non-spouse, you're looking at substantial taxation on those dollars. And one thing that a lot of individuals are using in the estate planning side of the business is the usage of stretch IRAs. And what you're doing there is you're stretching out the payment to the beneficiary. So instead of the beneficiary getting one lump payment, let's just say it's $100,000, their parent passed away, they've got a $100,000 IRA, It's being passed on to them. That client is much better off doing a stretch situation where the money is put into a stretch account, and the new client is going to start need to taking out RMDs based on their age. So instead of it being based on their parents' age, let's say their parent was 75 when they passed away, the beneficiary is, say, 45, then future payments based on RMDs are based on the 45-year-old. So instead of having to take out 5% of the value, they may only have to take out 2.5% of the value. So it can make a huge difference in their amounts that they take out on an annual basis based on the age. A lot of your estate planning, when you have large estates, what they're trying to do is find the youngest individual they make as the beneficiary of this lump sum of money, and that way that is stretched out for even longer based on the younger person's age. To what happens if you have a situation where the person was already taken out RMDs, let's just say it's a 75-year-old, they took their RMD out for 2019, the person passed away, let's just say this month, the beneficiary would not have to take an RMD until next year, the year after the death of the individual, and it's based on the younger individual's age. So instead of being based on a 75-year-old, it's going to be based on a 45-year-old. So really a great combination there on the stretching the accounts. I know this is also available on the non-qualified side. And stretch IRAs, I know we've done a number of these recently. One thing to keep in mind is the money cannot be paid out to the individual. It has to be a direct transfer from company A to company B. And if the money does go to the individual, it becomes fully taxable and it is not reversible. So if you have an individual that takes the money, there's no 60-day rule to reinvest it. By having it sent to them, they have lost their chance to do the stretch. So what the key with the stretch is it has to go from company A to company B. It has to be issued as a stretch account. Typically, there's going to be a form that has to be filled out with that new company. Most of our carriers do stretches on the qualified side, and we have some great options based on that side of it. I mean, if it were me, I'd want to get a policy that has very good accumulation, maybe a nice bonus, a lot of different features that some of these clients are looking for. We do have a company or two that actually do an income rider on a stretch, which is very unusual. Most companies do not do that. And as I mentioned, the people that typically use stretch IRAs are individuals that don't need the block of money. So let's just say they're inheriting $250,000 as an IRA or coming out of a 401k. They don't want to have that added into this year's income. So if they're already making substantial money, they don't want this additional money to come in to really increase that tax burden to them. They're much better off by doing a stretch. And by doing the stretch, they're lengthening the payouts. They're taking it from 1 year to a number of years, and thus they're lengthening the tax burden. Instead of having it all in 1 year, you're going to pay taxes out over a number of years. So this is really a good option. I know that a few years ago, some of these death benefits on some of these accounts, you're given a 5-year payout option, but that is more limited, obviously. If you're only being taken over 5 years, you're really not stretching that out over a long time, which the stretch IRA theme will really help with that situation. So we'll have to see how things go here the next couple of years on the stretch option. I know there's some retirement bills currently at Congress. You may see some changes if this is, applied this year or next year. You might see some changes in the use of stretch IRAs. So we'll see what happens on that, and we'll have to keep you posted on future stretch situations based on any type of tax changes that happen based on the government. We'll see how that plays out. But stretch IRA carriers, as I mentioned, we do have a number of companies that provide stretch IRA situation. So really a nice combination there based on usage on the stretch concept. But if you do have a specific case in mind, you can call up a marketer here at IMES. They'd be happy to run it up for you. I know with the stretch accounts, we see a lot of situations where people are trying to maximize the accumulation side of the product. They're trying to make as much as they can on those dollars. And we have some really good carriers now that recently introduced some really good accumulation plays. We've got a new accumulation play from Global Atlantic. We have a new one from Fidelity and Guarantee. We have a great accumulation play from Equitrust. A lot of these are utilizing the S&P index. We just introduced a new company, Equitable. They're in Salt Lake City, Utah. They've got fantastic cap rates right now, especially on non-bonus contracts. You can do a 7-year, a 10-year, a 14-year. I mean, it really depends on the state you're in. And you can utilize some of those really strong contracts to use for stretch IRAs. So keep that in mind. We've got a lot of different options on the stretch side, on the IRA side. We're a little bit more limited on the non-qualified side. I know we do have a few carriers that do the non-qualified stretches. We have Great American. We have North American. AIG will do stretch on the non-qualified side. And we also have American Equity. American Equity has some stipulations. They will only do a stretch on a non-qualified account if there's $30,000 of gain in that policy. So if a client has less than $30,000 of gain, they cannot go to American Equity to do a stretch non-qualified. So some of these carriers do have, some different rules and regulations on some of these stretch accounts. You basically have to pick and choose what best fits your client. But I can guarantee you're going to be able to find a good option for that client to invest in with some great returns and be able to utilize the stretch concept and really save the client some upfront taxes, and also being in a lower tax bracket down the years, it should save them money on taxes for years to come. But as I mentioned on the developments on the stretch side, I just downloaded an article that was just written here in the middle of July today from Investopedia, and they're talking about, as I mentioned, that legislation that's currently pending in the Senate and Congress, and there's some different language there on possible rule changes on stretch accounts. We'll have to see how that pans out here, going into 2020, and see how that goes going forward. Basically, when a client passed away, you basically had three choices. You could do annuitization, you could do a 5-year payout, or you could do a qualified or non-qualified stretch. I like the stretch account the best because you're not handcuffing the client with annuitization. You're able to pay it out over more than 5 years, typically based on the beneficiary's age. So I think it really is the most beneficial option to a client that has situations where they're inheriting money, be it an IRA or be it a non-qualified account that has large amounts of gain. I know with some of these indexed annuities that have been in the market for 10, 15, 20 years, you're seeing accounts that have $25,000 of principal and $75,000 of gain. So huge amounts of gain in some of these contracts. Of course, if the client put more money up front, maybe they put $200,000 in day one. Now their account's worth $700,000. They've got $500,000 of gain. Beneficiaries don't want to take a $500,000 increase in their income and pay the taxes on that. I mean, you're probably looking at 40, 50% taxation rates on those types of income levels. So really a stretch is a great way to go. I know I've done this with a number of agents here this year where they're looking at ways to get that client in the best light possible and to be able to help them out with that situation. We have our Ritz-Carlton trip that's actually coming up this next week. Qualification ended in June. We did start a new qualification for our next trip, started July 1st of 2019. It's going to be an 18-month qualification. We have not announced the new location. I'm not aware that we have one finalized yet, but that qualification will run through the end of 2020. So you have full 18 months to qualify. We're in very early, time period on this qualification for our next trip. I'm sure it'll be a very nice location, and we look forward to seeing as many of you down in Florida this next week as have made the trip. We had our biggest qualification ever on number of individuals that qualified. We look forward to a great week there in Florida. We also will have, hopefully in the next couple of months, we'll have our next location announced. So I'll be able to announce that on my next webinar this next month. Otherwise, I appreciate everyone joining me today. I try to keep this one a little bit shorter based on time frame here on a Friday morning. Everyone have a great weekend. If you do have any questions, give me a call. I'll be glad to get you signed up with some of our best carriers that come to play on these stretch accounts. And then we've got a lot of different varieties of products. You can go short as 3 years. Of course, you can go up 10, 14 years in durations. You could look at a 10% bonus rate for a client. You can look at, some really good accumulation plays right now. As I mentioned, we're just starting to see a lot of rate decreases file in here this last couple of days. I'm sure we're going to see more into next week. But I think if you have an app you're working on right now, you want to get it in August, I think you're going to see a much lower interest rate environment going into September. So otherwise, everyone have a great weekend. I appreciate your time this morning. We will have the recorded version sent to you here this afternoon, and you can utilize those recordings. Any questions, my name is Matt. I'll be glad to help you out with any questions you may have. Otherwise, everyone have a great week. Enjoy your end of summer here. We look forward to a very lucrative end of 2019. Thank you.